In this video, I'm going to talk about how does equipment leasing work. This is a part 2 and follow-up to the first video I made on this. Stay tuned. All right, thanks for tuning in. I'm going to talk about how you can finance equipment without putting any money down. I'm also going to talk about how you can get up to $500,000 financed without really needing a ton of financial info, just an application and the invoices for the equipment that you're purchasing. I'm also going to talk about the tax benefits that are massive when it comes to financing equipment, and they're so underutilized. And then I'm also going to share with you some things that you really should know and to watch out for when you're financing equipment. So what's really great about equipment leasing is everyone calls it equipment leasing, but it's a form of financing. You are leasing the equipment from the lender, but then at the end, there usually is either a buyout or a dollar buyout. So what's super important when you are financing equipment is you need to know, is there a dollar buyout at the end, or is it at fair market value, and then you'd have to purchase that piece of equipment back from the lender. So sometimes for certain pieces of equipment that are really not valuable at the end, they're useless, going the fair market value route might be better because you might get a cheaper rate in order to finance that piece of equipment. Typically, a dollar buyout is really the best way to go. You know what your payment is, you're comfortable with that, and at the end of the lease, it's a dollar, you buy it out from the lender, and the equipment is essentially yours. So first off, you can finance any type of equipment that's out there for the most part, whether it's transportation, restaurants, trucks, even cannabis equipment's being financed today, medical equipment, furniture, IT, really anything can be financed, which is, it's really great. What you need to know is what's cool about equipment financing is the lender is actually secured by that piece of equipment. So sometimes if you're looking to start up a business, not always, but sometimes you can actually finance equipment when you're starting up a business. So if you're opening up a new location, if you're opening up a restaurant, restaurants are the hardest, but if you have an existing location, you want to open up a new one, you actually can finance all of that equipment and not lay that money out of your cash flow. If you are looking to maybe start a transportation business, you can finance sometimes those trucks right out of the gate. And if you're a medical or doctor's office and you want to open up a brand new location, you're just getting started, you've secured your space, you're going off on your own, it's very easy to finance medical equipment for doctors and dentists. If you're already in business, people utilize it to replace equipment. If their company's growing, they'll use it to add additional trucks, add additional pieces of equipment that their employees can operate and bring in more revenue. So if you utilize an equipment lender and you finance whatever it is that piece of equipment is, that piece of equipment and that form of financing is secured against that piece of equipment. What's so important about that is it basically the lien or the UCC filing is only against that piece of equipment, so it leaves your cash flow or your receivables unencumbered, or basically no liens against it, so you still, with your business, can go out and get other forms of financing. So for instance, as an example, if you're in the trucking business, don't use a line of credit to buy a truck. Use an equipment lender, finance that piece of equipment, then you can still go out and get a separate line of credit or a term loan or other types of financing that's out there. And you can utilize that financing for cash flow and other things to help grow your business. Or maybe now you've got this truck and now you need to hire a new employee to run the truck and to do more business, but you might need a credit line to help fulfill the gaps in receivables or whatever. So it's really important, and we see so many people that will go out and take credit lines or use term loans to buy equipment, and a lot of times the lines of credit that are out there are revolving, so if you don't structure in like a pay down process, you can wind up costing you a lot more in interest, even though you think you've got a great deal and a low rate. If you're not paying down that line, then it can be very costly. Or we'll see people use term loans, and a lot of time term loans today, if you don't have any real estate involved, are typically like 1, 2, and 3 year type of terms. Sometimes in a best case, 5 years, but it's typically 1 to 3 years. And with equipment financing, you can finance out over 5 years. Also, they give you a nice monthly payment. Some of the other products today that are out there are collected on a weekly or bi-weekly type of basis. Another great thing is when you're financing equipment, you can typically finance 100% of that equipment and not actually have to put any money down. If your credit's been a little bit challenged, you may be required to put some money down. Or if you're financing a lot of equipment, like north of $500,000, to make the lender feel a little bit more confident, you also might have to put some money down. But typically that can be anywhere from 5 to 10 to 20 to usually a max of about 30%. But there are plenty of lenders and programs out there that are available where you don't have to put any money down. Most of the times when you finance equipment, you don't put any money down. What's amazing about that is you can finance the piece of equipment you're buying over 5 years. When you're financing equipment and secured by that piece of equipment, the rates are lower. So the rates are typically anywhere from 4, 5, 6, 8%, and then they go up from there based on risk and a number of different things. But what's amazing with equipment financing and leasing is you get a nice low rate. You don't have to lay out any money of your cash flow. You can finance that whole piece of equipment over 5 years, nice low monthly payment. But what's really cool, and again, check with your accountant on this, the laws are always changing, the tax laws are changing, and I'm not an accountant, and I'm not giving you tax advice, but you can also decide when you finance equipment to depreciate that whole equipment immediately that first year. So let's just assume that you finance $100,000. Finance it over a nice 5-year repayment period. You laid no money out of your cash and out of your business, but now you can essentially get $100,000 and depreciate it. It's almost like you're getting a $100,000 tax credit. And when we always hear about how people that are really great with financing and really crushing it and super successful in business, they're always utilizing depreciation to avoid taxes. Well, a lot of people do it in real estate, but if you're in a business that's equipment heavy, you can utilize it on the business side in your equipment and financing that equipment and depreciating it and essentially not laying any money under cash flow. So something most people don't understand, don't talk about. It's a really great tool. If you've got a profitable year, the year's coming to an end, and you know in the spring that you're going to need a bunch of equipment, I would say finance it at the end of the year, lock it in, take possession of that equipment, and you can depreciate it all in that year and reduce your tax liability. Really, really great tool. Again, make sure that you check with your accountant. So another great feature about equipment financing, which most business owners don't realize, is you can finance up to sometimes $500,000 without needing any financial info. If you're an established business, you've got good personal credit, no major issues on the business, depending on that piece of equipment, you can typically just fill out a simple application, supply the invoice of wherever it is that you're buying that piece of equipment, and some lenders will go all the way up to $500,000 without needing any financials. There's a lot of lenders that will go up to $150,000 and some $250,000 without you actually needing to provide financial information. They look at your personal credit, your business credit, and make a lending decision. Now, every lender's different, every situation's different. Some lenders require as little as 3 months of bank statements, and that's up to $150,000. Some lenders, if you go north of $150,000 or north of $250,000 or north of $500,000, again, every lender is different. Some may require your financial documents, so your profit, loss, and balance sheet. So if you know you're going to go for an equipment purchase and it's going to be a large purchase, make sure that you get your financials in order and have them ready so when you apply, you can move fast through the process. And then remember, 2 things to watch out for. One is when you're financing that equipment, you want to know if that agreement is a dollar buyout or a fair market value, also known as an FMV. And if it's a dollar buyout, that means you make your monthly payments, your last payment, there'll be $1 due, and then that equipment's yours. And then the other structure is a fair market value or an FMV structure, and basically that means you'll make your monthly payments, and then at the end, whatever is determined of that value of your equipment, you'll have to buy that out from the lender. Now, those can make a lot of sense, especially if that equipment's worthless. At the end, you can decide to buy out that piece of equipment for whatever the value is, or you can just turn it back in and go and release another brand new piece of equipment and do it all over again. So, each structure has its time and its place. Not one is better than the other, but if you want to own that equipment at the end, then that dollar buyout usually makes the most sense. The other thing that's really, really important is when you're financing equipment, typically in a typical equipment leasing structure, there's no discounts to paying off early. Just like if you're leasing your car, you're responsible for all of those payments. So just understand that when you're doing one of these deals, and this is okay, but you just need to know it, is that if it's a 2-year, a 3-year, a 4-year, a 5-year lease term, that you're responsible for all of those payments no matter what. If you want to pay it all off early, you can, but you'd have to pay all of those remaining payments, just like you would if you leased your car. Again, there's nothing wrong about it. The only difference is, at the end of the lease, there's either, if it's a dollar buyout, you pay a dollar, you own that equipment. If it's a fair market value, usually your payments are a little bit less throughout the lease, but then you're responsible for whatever that buyout is at the end. Again, just like leasing your vehicle. So really good things to know. There's a lot of different lenders out there that finance equipment, and each lender focuses on different things. Like some lenders love yellow iron or construction equipment. Some are big fans of construction equipment. Some finance restaurants, some hate restaurants. Some love IT, some don't really do IT. Some will do office furniture, some won't. Some will do title vehicles, and some lenders won't. So it's really important that you're working with the right lender. You can really spend a lot of time getting frustrated with this. That's exactly why I created my company, National Business Capital. My team is there to answer your questions and help you get you matched to that right lender. We built a platform that has over 75 lenders on it, and through our platform, we've helped secure over $1 billion in financing for business owners just like you all across the U.S. So instead of wasting time running around, check out the link below in my description and get connected with someone on my team. They can answer any of your questions. Again, it can be confusing and there's a lot of moving parts. We understand this. We take the frustration out of that whole process. So check out that link below. I hope you found this video helpful. Please drop me a comment. Please subscribe. And most importantly, keep growing.